Multifamily properties are suddenly hitting the capital region in much bigger numbers. So, what does that mean? Do buyers now have more negotiation power, or what are the numbers telling us? We're going to dive right into those and see what advantages buyers and sellers both have in this market that we got right here. So, my name is Chris McMahon. I'm a real estate agent for eXp Realty right here in the capital region, and got started in my investing career over 20 years ago buying my first multifamily property. Have done a number of fix and flips. So we're going to dive into these. We're going to analyze these numbers, and we're going to let you know what is going on in the capital region so you can make the best informed decision while you are looking to purchase your next investment property here. So coming right in. Here is a market snapshot. We're just going to look at the metrics at a quick glance here. So the median sales price for multifamilies right now is $268,000. Now that is up slightly from last year at this time. 25 days on the market is the average. Now the biggest thing that, and I just talked about a second ago, is new listings. 200 new listings, which is up almost 30% versus January in 2026. So we are up quite a bit here, and a lot of them have come recently. So the inventory right now is a little almost 437 as we got it right now. I was thinking about almost mid 400s, but it's pushing up there a little bit. Sales to list ratio is 99.8, so getting pretty close on average to what they're listing those properties for. So which means they're being listed at the right price range right in there. And the absorption rate, we're sitting at over 3.5 months, which is up almost 10% year over year. So some of these numbers are good. So we've got some inventory. Inventory has been low in this market for quite a while, especially in the capital region. But it looks like we've had a spike in some numbers that come up here. Let's check and see a little bit more with the pricing and sales and the activity and everything that we got going on here. So as we said, medium sales price, $268, which is up a little over 1%, what we got over there. But, excuse me. So 265 is the year-to-date median, and that's up 10.4% versus 2025, so year-to-date. So the average sales price is at 290, a little bit higher than that median sales price. But year-to-date, it's down slightly than what we're seeing. So this is reflecting a balanced mix of entry-level and premium multifamily transactions that are going on here in the market. So volume sold, 33.7 million sold last month. That's 116 properties that were closed in July. So 761 properties have been sold year-to-date in the capital region. Versus 2025, which is 859. So a little bit lighter year to date on the number of transactions that we've seen. So down a little over 11%. So that's reflecting a tighter supply line that we're seeing in there. So top price tiers, that 250 to 290, they led the way with 27 sales last month. That 3 to 399 was close behind them with 25. So they're pretty close on that. And the mid-market strength is really dominating the market right here, as we're going to look at just a second. Because that premium area, that 400, 499, that is actually up 33.3% year to date. That 500K segment still active with 7 sales. So it may be up a little bit more, but the number of actual sales that are going on in there, we're not seeing as much there. So the price trend says the active medium list price rose to $299, which is up about 10.5%. So let's look right over here on our chart. We can see these numbers. So we've got the pink right here and the blue. July 2025 is winning in that 100 to 199, that 2 to 250, 250 to 300, and even that 3 to 400 range as far as the number of sold listings, okay, that we got from this year so far. So there's a little more activity. But where it does change a little bit, those premium properties that we talked about, that 4 to 500 and the 500 plus, okay, or is it that 4 to 500, I should say, right here, is edging it out a little bit, okay? So that's where, some of these more transactions occurred in 2026 than 2025 on those. So inventory, days on the market, and we got supply here. So active listings, as we said, we're at 437. That's up from 413. So we see a little bit of an increase on that. Medium has climbed up. There's a new listings, 200. Strong summer replenishment. So we can see here, list prices at about 379, 705 signals some seller confidence that we got on there. So pending listings is 136. We got average days on the market is almost a month at 25 days, and the absorption rate is just over 3.5 months for these properties. So, and the list to sales ratio for my sellers out there is 99.8% that we got on there. Mortgage rates and national trends. Mortgage rates were originally expected to come down, and they were saying at the beginning of 2026 that we were going to see mortgage rates below that 6% by maybe early Q4 or the end of the year. Now that projection has been changed with certain economic factors have changed in the world there. Right now we're hovering a little over 6.5%. That kind of 6.5 to 6.7 is kind of going up and down. It changes every day. Feel free to reach out to me. I get the numbers every day. I can share them with you. As far as the mortgage rates, they do expect them to kind of come down a little bit, but we're not going to see it, below that 6% before the end of 2026. Hopefully in 2027, that will come down. They're going to be below that 6.5 by the time we get to the end here. So we're not going to see a huge change in the interest rate as we're moving forward here. So the 30-year fix is 6.58 to 6.66. I see that. Okay. Merging trends and what we need to do here. So we got Capital Region multifamilies. Right now is the time to act. So why is it the time to act? So this is an opportunity right now. A bunch of properties just came on the market here within the last 30 days. So more than we've seen in quite a while. And there's been a low number of investment properties to choose from as far as multifamilies go. So days on the market is just 10 days and the sales to list is at 99.8. So if you're a seller, those are both good things. They're selling fast, and they're selling when they're priced right, pretty much of what you're asking for, what you're looking to get. So these are for the well-priced multifamilies that we're getting out there. So rental income outlook is strong in this area, okay? It's up in Albany County, about 2.25% year to date on that average two-bedroom. Okay, so strong cash flow with fundamentals in there. So it's a buy and hold. Investors do have a lot of options out there that they can get into here and build that portfolio and increase the number of doors that you got. So new housing law there that has actually affected FHA. They have got multiple loan limits on that now. So there's more financing options available for 2 to 4 families as far as FHA is concerned when they come in there. So the inventory is rise, but demand is keeping pace. So 200 new listings in July, and the absorption rate has actually climbed up in there. So with more options out there, this is good for buyers because you have more opportunities and different things. You can take your time a little bit. You can be you're going to get some flexibility and get some leverage as far as negotiations are concerned, which is a good thing when you're trying to get in there and negotiate the best deal for yourself. Because remember, you heard the old saying there, the money is made when you purchase in a home. That's very true in a lot of ways, okay? So, local trends here. Multifamily and Albany properties are under $350K. That's really that area, the Albany area, Troy, Rensselaer, Schenectady. They seem to be where you're getting your most lower priced properties right in that area. So you're going to get the most bang for your buck as far as when you're purchasing. Some of the higher end, especially Saratoga, is going to be very higher end. Clifton Park going to be a little bit higher end as we get in there. But there's also going to be stronger rents in there. So you're going to get higher rent that's going to kind of offset that. So a couple of different things to think about. It's all kind of your strategy. How are you getting in? Are you going to buy and hold this for a long time? Are you looking to get in there, rehab, maybe do the BRRRR method where you cash out, refi, and then still hold it and add to your doors? Or maybe just it's a straight flip. I mean, when you're doing a multifamily, you're going to sell off to an investor after you fix it up and you increase their rent potential and the value of that property. So If you have any questions, a specific area you're looking for, a specific market trend, or maybe there's an exit strategy or something you're looking for, like I said, burr method, buy and hold, fix and flip, or even a short-term rental, something like that, and you like me to dive into an area specifically for you, reach out, get a hold of me. I can put your own personal report together, kind of tailor it to what your strategy is as far as an investment property, if it's a buy and hold, a fix and flip, to help you really get a good idea of the market area that you're in, or even the market area you should be in, because there's some areas where the fix and flips are going to be better option than maybe the buy and holds as far as an option to as an exit strategy, so and vice versa. So you just got to know the areas, and the numbers tell the story, and things are constantly changing around. So subscribe to the channel if you found some value in it. If you've got questions, reach out to me. I'd be more than happy to put a plan together in place for you. And I've also got some lenders that specialize in investment properties as well that I can put you in contact with to help you with that first step, my buyers, as far as getting yourself your budget and your plan in place. So I will see you guys on the next video.